Well, investors are shrugging off a weaker than expected jobs report. On the one hand, we've been talking so much about investor concerns around additional rate hikes coming, and yet here we are today talking about a jobs report that essentially cements another rate hike come July, and the market's just taking it in stride.
This has been an inflation war. So the Fed's not trying to kill the economy, it's trying to kill inflation, and I think they're winning. I think there are some positive catalysts coming up, including, inflation. Next month, the June CPI could fall to 3%. It really takes the pressure off the Fed. We've got the generative AI story that I think is gaining traction.
Hello and welcome back to my channel. While central banks have kept up their hawkish rhetoric, signs of moderating U.S. inflation have fueled big gains across technology shares. So, what's really going on with the U.S. economy and market? What should investors do? Well, in today's video, Raoul Pal has some exciting insights to share about the state of inflation and its impact on the market. Are you curious to know what's going on in the market right now? Well, you're in the right place. So, sit back, relax, and get ready for an informative ride. And if you want to stay up to date with the latest crypto insights, markets, and economy, make sure to hit that subscribe button and the bell icon. All right, are you ready? Let's dive right in. But before we dive into the details, we have some exciting news for you. This week, we'll be doing a free live Q&A with Samuel Plesnick, our master trading coach. He'll be answering all your burning questions about crypto, trading, and investing. Here's a message from him.
My name is Samuel Plesnick. I've been managing 2 crypto funds, and I've been also a market maker in top 10 crypto exchange. I would love to invite you to our special Q&A session with me, which is going to be Thursday, July 20th at 11 a.m. Eastern Standard Time. I will be sharing my strategies there. I will be sharing there what does it take to become a successful full-time trader. And I will be also answering your questions that you might have about trading. Click on the link below. Join me on our Q&A session on Thursday. So looking forward to talking to you. Ciao.
Largest driver of everything, of all economic activity in all of the developed countries, is demographics. GDP growth is driven by population growth, productivity growth, and probably debt growth. What we've got is population shrinking in most countries, or in the US at least stable, but the birth death rates collapsed, right? So there is no population increase, and most people have closed borders or throttled their borders somewhat because there's a scarcity of job opportunities because of globalization. So people have tended to throttle back on immigration. Okay, so that tends to be the big forward indicator for inflation. It's very difficult to have an old population generating inflation. I mean, I've talked about this a lot. When I saw my father retired, I mean, his spending probably fell 65% in the first 2 years of retirement. It's a psychological effect. The psychological effect is, I don't know how long I'm going to live for. Am I going to run out of money? Right? That is so powerful as a fear that people will entirely change their spending patterns. There is a school of thought came out of one paper that an aging population is inflationary because those people will spend their money. But it's the rate of change of spending money that's important here. The baby boomers might have a lot of money, but how do they pass it on? What was very interesting is we saw this in Japan. Their old population eventually ended up living longer than expected, pass it on to their kids who had retired. So it just didn't get recycled into the economy, never does. So I'm a believer that the demographics are a problem. I understand that there is a scarcity of jobs in some areas, and that drives wages up. But when the labor force participation rate is 62%, there's 38% of the people who don't get wage rises. So at aggregate effect, wage rises aren't as pervasive. They don't drive demand, which drives inflation.
Get ready for some market insights. First of all, good news for investors. You see, U.S. stocks rise despite mixed signals on the economy and inflation. Central banks have been talking tough, but the U.S. inflation has eased a bit, boosting tech stocks. But there are also signs of trouble for the economy. The gap between short-term and long-term Treasury yields widened, showing that investors expect slower growth in the future. The Fed's rate hikes may be biting too hard. Now, let's talk about jobs. The strong job report makes it very likely that the Fed will raise rates again this month, after stopping its rate hike cycle to fight inflation. But the job report also suggests that the job market is slowing down to a more normal pace of growth. This trend continues, it could give the Federal Reserve some much-needed reassurance that their rate hikes are successfully reducing inflation pressures without throwing the economy off balance. So, there you have it, folks. The market is dancing to its own beat, navigating through warnings and signs, but still showing resilience. Let's get into the next clip to hear more from Raoul Pal.
We're seeing things like AI and new technologies coming in that replace workers. So if you look at Amazon, Amazon now has, I think it's 1.5 million employees and 500,000 robot employees. If you think of them in those terms, those robots work 24/7, 365. They're more productive than humans in the roles that they do. But let's assume they're the same productivity. So they've got an equal robot man hours versus man hours. And that equation is going to keep happening because technology does one thing. It looks at the highest cost and destroys it. So everything that gets digitized goes to zero in cost. We've seen it with cloud compute, with mobile phone data, with literally everything. So that pervasive trend of technology and the productivity of technology plus demographics makes it almost impossible. So why we got the inflation is not a function of the money that got printed. That washes in and washes out. It was a function of no supply because factories were having to get back up online and supply chains were broken and everybody coming out of lockdowns. That demand and supply, we saw exactly that after World War II. Same outcome. We've been following the charts identical, is inflation rises up, and then it just collapses back down. You'll have an echo because of the year-on-year effects, but it doesn't come back. And I don't see a reason why it's going to come back. When I press people to say, show me, they say, deglobalization. I'm like, fine. When I look at the amount of world trade, it's basically stabilized. It's not shrinking. And we're also seeing supply chains change. So the US moves away from China and moves to Mexico. It's not all coming back to the US. So I'm like, somebody needs to show me a real data-driven reason why inflation is going to stick. Usually when you get down to it, when you open your mind and listen to what they're saying, they're manifesting their own fears or desires. It's the fear of the 70s redux that's coming from an older group because they want justice for what central banks have done. They want their justice. They want to be proven that if you mess around with money, it creates inflation. I don't think it does. It creates acid inflation because of the denominator effect. I think inflation is very hard to actually create for extended periods of time without demand, and that has to come from population.
AI and new technologies are taking over jobs faster than you can say robot revolution. These AI are like productivity powerhouses, outperforming humans in terms of speed and efficiency. And guess what? This trend is here to stay, and this implies that inflation is not here to stay. With this tech-driven tidal wave, coupled with the dynamic nature of demographics, inflation finds itself facing a mighty challenge. This isn't your grandma's inflation story. The inflation we experienced wasn't just about wads of cash being printed, but because of supply chain problems and high demand after lockdowns. Is there any solid, data-driven reason to believe that inflation will persist this time around? Well, the evidence seems to be lacking. Some folks argue that deglobalization might be a factor. But guess what? Global trade has actually stabilized instead of shrinking. Now, it's time for your thoughts. What do you think about the whole inflation conundrum? Will there be more rate hikes? How will it affect the stock and crypto market? Let me know your thoughts in the comments below. And don't forget to subscribe to my channel for more updates on crypto and economy. Also, be sure to give a big thumbs up to this video. Thanks for watching and see you next time. Adios.